All right, Matty. Something grave has happened here this week. Team, we filmed an Ask Matty show earlier this week, and I forgot to download it, and it ended up getting deleted with the rest. We film a bunch of shows on this platform we film on, and it just got full, and I deleted it, and I'm like, oh, crap, I forgot to download the Ask Matty show of this week, and it's just gone into oblivion. So for today's show, we're actually going to re-answer those questions. I know it might sound a little unauthentic, but these were some good questions that we had this week, and so we absolutely wanted to film these. So that's what we're going to do. So if we're not as jazzed up and witty responses, that's because it's because we're refilming it, refilming the responses. But before we get into that, team, Matty, how are you doing today?
Hey, I'm doing great. It's Friday, feeling good, looking good. Let's get after it.
Forgot to ask. But before we get after it today, team, first, become a Crypto Charged member. Click the link in the pinned comment below. We actually have on a crypto tax expert today, Matty, which is super exciting. So if you want to see guests, get info like that, click the link in the pinned comment below. Under that, shop.cryptocharge.com, get some swag. And finally, team, please subscribe to this channel. We post every single day, so you're going to want to stay in tune with the latest crypto news. But today, your comments, your questions, your hot takes. We got a lot of good ones right here. The first one is very interesting because we're kind of shitting on someone we don't like, but let's just read it. Let's just read it a little bit here. Vega Hex, I choose Pulse Chain that just launched. So Matty, something big with Pulse Chain with Hex happened this week. What happened?
Yeah, so Richard Hart, the creator of Hex, Pulse Chain, and Pulse X, those are all different offerings and variants from Richard Hart. He was sued by the Security Exchange Commission for selling unregistered securities. And, obviously, I despise the... Hey, please disconnect from my Bluetooth. All right, so can we just restart this question? Or
No, you're good. Just go. Just what happened with Hex? What happened with Hex?
So yeah, Richard Hart, creator of Hex, Pulse Chain, Pulse X, was indicted by the SEC for securities fraud, selling unregistered securities, and I despise the SEC through and through. Obviously, we just finished 2 years of waiting for an important decision in the Ripple case, alleging that Ripple sold unregistered securities. XRP itself has been labeled a non-security. But I think that everyone assumed that all of crypto was automatically going to get clarity because of that decision, but that's not the case here. And one of the important prongs of the Howey test that we really needed to avoid in this Ripple case in order to get clarity for XRP was the expectation of profit based on the effort of others. And that's a very important, or there's two prongs technically smushed together into one. But that's really, I think, where the SEC is going to be placing most of their emphasis in this case. Because one of the things that they had plastered on their website about 18 months ago when we first did a review on Hex, our team said, hey, we're interested in Hex, Pulse Chain, all these things. What do you think? We obviously did a review and we said, hey, we don't think this is a good trade idea. Here's why. On their website, one of the things they put was, we've done this much gains compared to Bitcoin. First of all, pointing to the fact that there is a group of people that have created this product, and based on their effort, they're going to do better performance than Bitcoin, a decentralized asset from an anonymous creator. Not that necessarily gives it more clarity, but either which way, that was one of the things on there. Richard Hart also very overtly used monies that were certificates of deposit. So when you guys staked your Hex, he took that money that should have been in the protocol and used it to buy luxury goods, used it to buy Louis Vuitton bags, used it to buy jewelry, used it to buy private flights, right? Richard Hart straight up screwed you guys over. And there's still people out here in the Hex community who are like, oh, you don't understand Hex, bro. You just don't understand the investment. No, I promise you I do. I understand lots of other models other than just blockchains, right? Like I understand DAGs, I understand other types of models. It's not that I'm ignorant to the fact that there's more types of crypto out there. Hex through and through is a Ponzi, it's a scam, and it's unregistered security. And I do think that in its entirety, that Richard Hart goes down and that Hex itself no longer continues to exist. It's unfortunate for Hex holders who are already down over 99% right now. But at the end of the day, it is what it is. You're not putting yourself in a position to be in high quality assets. So a lot of you guys are out there chasing yield. And that's really where the danger starts. Anytime the only upside to the asset is, well, you can earn yield on this, that's really concerning to me. So, it's sad, but that's what happens when you're in this space early on when we're still waiting for regulation.
Yield, Matty. That's actually funny you brought that up because maybe yesterday there was a whole thing with Bitstamp, I believe, and they were offering 2% APY, or they said it's going to be going forward that it's a sure thing, 2% APY on XRP, but XRP isn't like these other cryptos that you can stake like Casper on Casper.live. What was the scenario with that? Because you talk about yield, and a lot of people actually do that. I see it on like TikTok. People are like, "Oh, I'm keeping my crypto on exchange so I can earn yield from it." Which is obviously
Right.
not that smart considering all the exchanges that are going down. What was with that? Is that legit? Like, staking your XRP for 2% APY on Bitstamp?
So you can't stake it, but you can lend it
Lend
and
it,
earn
right?
yield, right? So, but for me, 2% is a really small amount to put up all that risk of my entire deposit, being gone,
Yeah.
right? Like I put up 100,000 XRP to earn basically 2,000 XRP, within a year's time. I just don't think it's worth risking all 100,000 XRP just to make an additional 2,000 XRP. When we talk about the Casper model, that's natively a proof of stake model. So when we stake in Casper.live, we're not lending those coins out. We're delegating them to validators to secure the network. Vastly different situation. So if someone tells you you're staking, it better be a proof of stake model. Otherwise, they're misleading you and you are lending your coins to earn yield.
Yeah, I wanted to say, because you brought up Richard Hart walking, because I saw this from, it was Tiffany Fong. I wanted to give her credit. She posted a video about the SEC suing Richard Hart, but it was the video of him walking out of Louis Vuitton with like Louis Vuitton bags hanging out of his mouth and on the side of his arms, which is actually just hilarious and absolutely outrageous. It's funny and so messed up at the same time. For, I guess, Hex, people that bought Hex. But that just goes to show you, Matty, that people aren't that detailed, or they don't analyze that much when they go in to buy crypto, which is very sad, And this was something I voiced on last time we filmed the show. It's our part 2 of filming this exact show. But I voiced about when they brought up Hex, people were like, "Hey, Matty, can you talk about Hex?" And it was like, no, off the jump, people are still pushing for these meme coins, and they're labeled meme coins, but for some reason, people continuously ask about meme coins because they think it's going to happen overnight. They're going to be able to make money overnight, and that just doesn't happen in crypto, And you really opened up my eyes because, like, crypto for me, it kind of does feel like it happens very quickly, but it's never overnight. That does not happen, And so, like, the way in crypto is investing just like any other vehicle out there, but there are different ways to make money here. Like you were just talking about, Casper.live. That's like one of my favorite ways to earn a high yield APY, and that's I'm validating the network. Or another one I brought up last time was the we use the Coinbase card, and so it's like 4.6% on Coinbase, but I'm using that weekly or bi-weekly. I'm depositing money on there, so it's beneficial for me if I'm using that Coinbase card to have my money on there. Otherwise, like all my other assets need to be on my ledger, and that's just everything overall revolving around these meme coins, and there's just this quick way to make money overnight, and there's always going to be risk, and I think that's what you've nailed on the head with a lot of your talking points. There's always risk in everything, but you have to look at the things that aren't as risky as the others. You have to do your due diligence when it comes to crypto assets. Did I nail the head on any of those things right there, or what do you think?
Yeah, definitely. With the meme coins, everybody wants to talk about the exceptions. The Doges, the Shibas, the Safe Moons that did like these quick little moves up, and then they give back all those gains. But nobody talks about the majority of meme coin and meme coin variants that fail or are just straight up rug pulls. Right. The example of Bald meme coin that was released. I think it was online for maybe 48 hours total. Obviously did a bunch of marketing, got a bunch of people to deposit and get excited. Price goes up. Everyone goes, "Oh, it's going for another 2x. I'm going to put a bunch in there." Right back to zero within 48 hours. But somebody, the creator of the token, made a lot of money, right? Rugging you guys, scamming you guys essentially by tricking you guys into thinking that this was a legitimate project with liquidity and it was about to take off without you. I never ever invest in something because somebody tells me it might take off tomorrow without you. No way. Like it's just not happening. I'm going to invest diligently, consistently, and there's never a rush. If I feel like I need to rush into the investment, it's probably not the investment for me, or maybe I've already missed that opportunity.
Wisdom. Quality Block says Ledger is going to take away all the risk, huh? Or dream on. Your crypto is still out of your hands.
I love it when people just paraphrase incorrectly all the time. I've never said that Ledger removes 100% of the risk. What I've said about Ledger and cold storage solutions is it reduces as much risk as humanly possible. First of all, crypto will always be out of my hands because it's always on the blockchain. It never ever leaves the blockchain. we only have keys that prove that we have a certain amount of ownership over the assets that are transacting on that particular blockchain or other DLT model. So when we look at what options we have out there, right, you have like kind of like bottom of the barrel is like keeping your coins on hot exchange, right? Coinbase and Binance, they're still using cold storage devices. They're just partitioning those cold storage devices into different sub accounts that you deposit and essentially sharing a singular or multiple cold storage devices with other customers, right? Obviously, the downside of that is, somebody somehow gains access to one of these, servers, or there's maybe somebody at Coinbase who's nefarious and is able to get access to, the inside of these wallets and provides an opportunity for a hack, right? You could be the victim along with, thousands of other people that get hacked out of that one particular wallet. A step below that would be maybe like a software wallet or a decentralized solution like Dissect or MetaMask. You guys are pretty familiar with those, right? You get your 24 seed phrases, you keep those offline, and the only way to interact with those, of course, is to restore, to put those seed phrases back in. But again, the reason that I like cold storage, and this is why I kind of consider it top tier, is it adds an extra layer of protection, right? So when I set up my ledger, I still get my seed phrases, right? I write those down on a piece of paper, I keep them somewhere safe and separate, but I cannot move any money or sign any transactions without my physical device. So I have to plug it in and I have to put that pin in order to move money anywhere, right? So it's nearly impossible. Like it's near zero, not to quote Oppenheimer here, but near zero chance that somebody's able to actually steal something directly out of my ledger without breaking into my house, grabbing my device, correctly putting in the PIN number, which you have to get right away in the first 3 times. Otherwise, you're locked out and they make you restore using those seed phrases. So now, again, you got to be ransacking my house to find my seed phrases, which I, again, have taken an extra step to make sure they're not even all in one place, right? In order to sign a transaction to move those coins out. So unless you're an idiot and you go online and someone says, oh, in order to connect your ledger, put all your seed phrases here, and you give your seed phrases to somebody, that's the only way you're going to give up that security, right? So at the end of the day, it's more about what level of security am I going to implement out of what tools are available to me to keep my assets as safe as possible. And cold storage does reduce as many risks to keep us to near zero as possible.
If you break into Matty's house, they're in 2 separate locations. Or you probably find that out when you pull up the piece of paper and there's only 12 words on it, and they'd be like, oh my gosh, where's the other 12 words? We got to go ransack the house to find the other 12 words.
Someone's going to be ripping out all my drywall. It's going to be a mess.
You see, what I do is I take every one word and I hide every single word all over the man. All right,
That's great.
Let's move on. JJ Hyphy says, what do you guys think about XDC?
So I'm not fundamentally familiar with XDC. I know that it's in the family of kind of the payment plays. I know there's actually an XDC specific conference that's coming up sometime here in the near future, but we can do a little bit of TA on it here for you guys and kind of just take a quick look here. Let's go ahead and go XDC. So let's make sure that we got the best chart available to us.
Didn't it go crazy earlier this week?
Yeah, I think we got like maybe a 50% pump if I'm not mistaken. All right, cool. So let's go. We got the crypto chart here. All right, so let's go ahead and just wipe everything off of our screen here. Let's come out to a much bigger time frame, maybe like a 2-day time frame. So every little tick's worth 2 days. Cool. So one of the things on this chart that's very interesting, right, to me, and this is the crypto chart. So this doesn't represent necessarily any particular exchange. It's more like a culmination of like the oldest data that we have. Is all of these illiquidity wicks to the upside here. Stealing all the liquidity up from these higher prices where we actually had a lot more volume being done in there. That's very interesting to me. One of the things though that we can do is we can always grab our Fibonacci, right? We can go swing high and we can go swing low in here. And interestingly enough, you guys can see that we fired up, we broke over these MAs here, and we actually saw this example most recently with Bitcoin Cash. Bitcoin Cash did a very similar move to this. A lot of altcoins are actually poised to make a move very similar to XDC right now. From the lows, if we were to measure from the ultimate low from December of 22 to current market price is up over 300% right now on XDC. So you guys can actually see we wicked into that 382 here. That's kind of where some of these wicks stopped up in here, right around 8.7 cents. Broke over that 236 there pretty heavily after initially encountering it there. So short term, I think that we've cleared out a lot of the imbalance in here. So what I mean by that is that when we had all these prices up in here, right, all this price action, you had all these wicks and stuff that happened in here, but you never had like a proper retest. It was either like a straight up and straight down or one of these wicks popping up into these areas. This is the first time we've cleared out properly by actually marching candles up into this area and clearing out this imbalance. So in my opinion, XDC actually has more room to move down in the short term, and I'd like to see probably at least the 236 right around 6 cents retested. Ultimately, if I were to say a real proper rebalancing, that would be more close to this area down here towards 4 cents, kind of where this top came in here, as well as this top over here. So pulling back anywhere between 4 and 6 cents in the short term here on XDC does make sense to me. The upside, looking at this Fibonacci range, puts us anywhere between 30 cents and 76 cents. So, price is trading right around 8 right now. I think it's a little expensive. Again, anytime price does a big appreciation like this, I'm not a buyer, no matter how fundamentally bullish I am. XRP is a great example of that. I can't be buying XRP at 66 cents right now when the past year and some change I've been buying it sub 50 cents, right? Doesn't make sense to raise my average just because price is running, right? I'd rather continue to load it into things that haven't done it yet. So if you want to set some limits, anywhere between 4 and 6 cents is really kind of that sweet spot that I think you could pick up some additional XDC.
Ren19, long question here, but I'll read it fast. Come on, I've been in crypto for 5 years now, and just a piece of advice, guys. If you want to listen to them and wait for 80 cents, she's talking about Render here, go ahead. I've been there before when Solana is just around $3.30, and I'll wait for it to go for $1, and I ended up buying at $8. It doesn't matter if you're a TA god. When bull market is just starting up, especially with spot Bitcoin ETF around the corner, one good news can shoot all tokens to insane prices. Render at $1.80 now, coming from $2.80. If they were wrong about their TA, don't blame them.
Yeah, obviously, fair amount to unpack here. In your example, first of all, when you're talking about Solana, it was at $3.30. You were waiting for it to go to $1, and you ended up buying at $8. You still FOMO'd in. You still bought into the FOMO. At the end of the day, you. Regardless of, and again, if you say you've been here for 5 years and you think the TA is garbage, where did you even think that $1 was a good price for it? Was it $1 because you felt like $1 was a good price, or did you have good reason to believe it? When I laid out the Solana case, or when I laid out the Render case, I showed clear imbalance on the chart, just like I did here on the XDC chart, right? I'm showing you where price had incredible resistance, and resistance should be turned into support before moving higher. It's the healthy thing for price to do. There's lots of times too where people say, well, this has never happened before, so it's never going to happen in the future. Bitcoin is a great example of that, going below its previous all-time high. When people told me that, I was like, it's not even a solid TA concept for price to not go below its previous all-time high. In fact, retesting that previous all-time high as a new floor of support is the most healthy thing that price can do. Of course, we went even deeper than that and retrieved some liquidity from some deeper pockets there, which again is supported by order books and Fibonacci's and other things. But you're trying to combine a few things together here. You've been in crypto for 5 years. Congrats. Most of us have been here longer than that. And when we're looking at the fundamentals of investing, right? That's the first layer of it getting involved. I don't invest in anything I'm not fundamentally bullish on. So I've already done my research on Render. I understand the fundamental case for it. I have zero disagreements with a fundamental case for investment. However, I do think that it's ignorant and foolish to not also include a technical aspect to that and only buy assets that are in good technical positions where you're not putting yourself in a position where you could get hurt, right? Because the flip side of that is, I buy Render now at $1.80, $1.90, $1.70, and then price drops right back into my zone, and now I'm down 50% on my position or 60% on my position when I could have just been patient and waited for it, right? Like I talked about at the beginning of the show, I refuse to FOMO into anything just because price could take off without me. I've been diligently stacking the majority of my bags over and over and over again, and I will continue to stick with that plan. Like I just explained, I'm not buying XRP right now because it's breaking my technical rules. I'm buying Casper right now because it's within my technical range. I'm buying Zcash right now because it's within my technical range. Those will exit my technical range at some point, and I will only do limit-based ordering. And if those limits don't get filled, I'm okay with it because I've been packing my bags accordingly. So if you're going to try to play this game where you try to get in and out of the market because you're buying what everyone else thinks that they should be buying on Twitter, and you're extremely fundamentally bullish, go for it. I am going to do exponentially better than you. It is mathematically baked into the way that I'm evaluating these charts, both with estimated returns as well as estimated downside risk. So if you're not evaluating your total risk management and you're just YOLOing in because you're fundamentally bullish, you're making massive mistakes with your investing.
Yeah, I hope none of you guys invest like this, because I don't mean to tear this person apart, but it does look, Matty, like they were waiting for $1, but they held on everything. and then it just started taking off. It's like, oh, I better get in now, and then you get in at $8. Like there was no
Right.
DCA strategy. There was no. You're waiting for one limit order, is what it sounded like, which is
Right.
which is terrible. You're gonna miss it every single time, and then you're gonna be buying render at $8. So, team, don't do that. Don't do that, because Matty lays out strategies all the time at CryptoCharge.com, so you don't make mistakes like that, because then you're not making money. If we're buying the top of an asset, you're not making money. You're losing money. So don't lose money. Become a member at CryptoCharge.com. I'm super happy we got to reshoot this show. I know there was a lot of good questions right there, especially about XDC. I know you guys on TikTok were asking, oh, what's going on XDC? Should I buy it right now? Well, now you got the technical breakdown. No, don't buy it right now. Wait for a pullback. Matty,
Right.
Matty, great job today. Anything to leave the team with here?
Like I said a little bit earlier in the show, I do see a lot of altcoins setting up for moves like we saw on XCC, moves like we saw on XRP, moves like we saw on Bitcoin Cash. So if you have assets on your radar, or you already have those assets in your bag, and you're looking at assets that look similar to those assets before they blew up, those are the ones that you should be paying most close attention to right now and stacking up on, because what you don't want to do is chase, and you don't want to chase these pumps, because these pumps do end and they come back down. And we've seen it over and over again. And I want you guys just to be safe and diligent and consistent with your investing. So only contribute to bags right now, to assets that look like the assets that have blown up that haven't blown up yet.
Words of wisdom, Matty. All right, team. That's all we have for today. Thank you for joining us. And until next time, see ya.